Hey guys and gals, this is John and welcome to the free video. So a very interesting week setting up in front of us. Of course, we have monthly expiration, not this week, but the next, and that always does kind of start to impact the markets. One of the things I've been watching right here fairly closely are some of the key correlations. You can see that bonds, i.e. TLT here, rallying back up to weekly resistance. You can see on a daily chart, it looks pretty positive. We're starting to lose a little bit of momentum here, but the question is this something that's going to turn into a big trade, or is this going to fizzle over? Okay, the thing here is that if bonds do break out, then there's the potential that the markets could roll over, i.e. money's flowing into bonds, but if it does roll back over, does that mean that stocks are going to rally here? Okay, and it's important to kind of keep an eye on some of these correlations and how it's impacting the markets. The other thing that I've been wanting to keep an eye on here is IWM. Okay, so IWM essentially is in a daily downtrend, and even though the NASDAQ had a good day today, and all the markets actually had a good day, the Russell is in not only in a daily downtrend here, and all the moving averages are stacked smallest to highest. Okay, that is by definition a downtrend. You can see that we've got a crossover here on the weekly chart and a potential squeeze. Okay, that's a red flag. It's a huge red flag, and we want to take that into consideration. The other thing here that I've been looking at are in terms of the energy sector, and this is something that, I mean, I can't tell you how many oil people that I talked to in Texas are like, oh my gosh, we thought the bottom was in, and I kept telling them it wasn't. And the proof of this was that when we got this weekly squeeze here, all that happened was it just stopped here at this fire line, meaning that a weekly squeeze couldn't push it through, so as soon as it loses momentum, it's going to die. And at this point, I don't think it's done. Oil's about 43 bucks a barrel. I think it has lower to go. And guess what? If energy goes down, so are the markets. But at the same time, I guess the paradox here is that there are sectors that are doing fine. For example, XLP, which is consumers, just fired a weekly squeeze. Okay, so the question with all this is, how do you trade this? Is there anything specific that you have to do in this kind of a situation? And this is something that I was thinking about in Cayman, because I started seeing patterns that I saw, like 12 years ago in the markets. And when the markets change, you do have to kind of change up your trading a bit to take advantage of it. So to this end, I'm going to do a free webinar on Tuesday. So that's coming up this Tuesday. And it was interesting because while I was in Cayman, what's nice about taking a break from the market is that you get some time away from the market and you get to kind of fully understand the market situation and the whiplashes that are involved in this point. And I had time to kind of go back in time and look at different market conditions that fit this. And it's very, very similar to kind of what was going on. A while ago. It was over 10 years ago. But history, these patterns repeat, and human emotions are the same. Nobody learns anything different, and whether those weekly squeezes go up or down, there's going to be a continued period of prolonged kind of agony for people who don't really understand that. Okay, so I just want to do this webinar to let people know, it's like, look guys, this is the kind of stuff where you're going to be able to make essentially the most money for the least amount of risk right now. So what we're going to be talking about is the types of trades that are working in the sideways market. And sideways is a little bit of a misnomer because I would call it violently choppy, okay? A little bit different than sideways. Sideways by itself is, let's sell some premium and everything will be right. And that's not the case here. How to take advantage of today's broken correlations. This is a huge thing, and it is screwing up most funds, but there's a way to take advantage of it. Why you should completely avoid most long-term directional trades right now. Now, as we already see, there are stocks like AZO and some smaller companies, IBD type companies. They're fine, but most stocks at this point, you really don't want to be making any long-term commitments to them, okay? How to take advantage of and fully embrace this current whiplash environment, because it is not going to go away anytime soon. All right. And then last but not least, what time frames are working best in the current markets? And of course, a few more tips there for you. All right. So I'm super excited about this. This is just one of those where it kind of all came together while I was thinking about this in Cayman. I was looking at the markets and looking at the history and was like, my God, this is just like, back at this time, and these are the kind of strategies that work the best during that time. So first name, email, again, Tuesday, the 11th, 8 o'clock East Coast time, 7 o'clock Central, and we'll see you then.